Good evening, everybody. Welcome to tonight's stream. Hopefully you can hear me okay. And if you can, we're going live tonight on a Monday. So I know normally is our Tuesday is our normal night, but I wanted to bring on a special guest and I wanted to talk about FHA financing. So I'm joined by our guest this evening is Jeff Williamson with Belay Bank. And we're going to break down everything you need to know about FHA loans, how they work, who qualifies, and how to avoid some of the common mistakes. And then we'll also dive into what's happening in the mortgage market right now. We'll talk a little bit about rates and some of the challenges that are out there. So it's going to be a great stream tonight. So I'm excited to bring on my first guest, and that is Jeff Williamson with Belay Bank. Hey, Jeff. Well, thanks for joining me on the program.
Hey, David. How are you, sir? Good to see you as always.
I'm doing great. All right.
And appreciate the invite. So I'm excited.
All right. Excellent. All right. Terrific. Well, hey, we got some regulars. James is in the house. James, thanks for joining us this evening. And then Zaretha's here too. Thanks a lot. All right. Terrific. All right. Okay. It's great. I'm glad you guys could join us tonight. So, Jeff, what I'd like to do is, you've been doing the loan business for a long time. Tell us a little bit about yourself and a little bit about Belay Bank and your role and that sort of thing.
Yep, absolutely. So, as you mentioned, yes, time does go by fast. I started in lending, at the end of 2021. So I have 24 years. So yes,
right.
That just means experience, or you're getting old, however you want to look at it, And then a little bit about myself. Spent most of my life here in Omaha.
Okay.
And so the company I'm with and my role is, so we're Belay Bank Mortgage.
Mm-hmm.
We are actually, our parent company is First Bank out of St. Louis.
Okay.
We are a nationwide bank. Now, we don't have locations nationwide, mainly St. Louis, Kansas City, Omaha, Lincoln, and then about 10 in California.
Okay.
But we do lend nationwide. We have customers all across the country. So that's fantastic. But here in the Omaha area, I have an office, myself and 6 other loan officers, and then we have another group I oversee in Lincoln of 2 salespeople. So we have,
wow.
we have 10 in Nebraska, and then, like I said, there's probably 40 mortgage people between St. Louis, Kansas City, and California, and we lend across the country.
Okay.
So it's been a good run, and very happy with what we can offer people and help them out with the home buying process.
Awesome. Hey, it looks like we got Clark is in the house. Hey, Clark. Hey, Clark is a friend of mine from down in Atlanta, and Clark just hit 1,000 subs. So if I had any sound effects, Clark, I'd run those sound effects. So congratulations on hitting 1,000 subs. So thanks for joining us tonight on the stream. All right. Hey, Jeff, well, for those who may not know, what exactly is an FHA loan and how is it different from conventional financing?
Sure. So FHA is a loan. It stands for Federal Housing Administration, which is a government agency, and they don't underwrite the loans. They just originated the loan program originally 30, 40 years ago. To be honest, David, I'm not even sure when, but they secure the backing. So if banks like ours or other banks want to use the loan, we use their underwriting guideline. We can still keep the loans, service it, but they are, and we'll get into this later, there's FHA Mortgage Insurance. So they're kind of backing the loan in essence at the end of the day. So when you get into for the average consumer, that's too much in the weeds of the mortgage world. But what's the difference? What's the difference between an FHA loan and a conventional loan? Well, there's a couple big things. So one thing is to start off of the FHA loan limit right now is $524,000. Okay.
Okay.
On a conventional loan, you can go up to $805,000 before you enter that jumbo arena. So,
gotcha.
If you're a first-time home buyer, prices are different all across the country. But here in Omaha, a lot of first-time home buyers, as are 300, 350. So FHA, it's right in the target range for an FHA loan.
Gotcha. Okay.
But you go above that 524, and you're going to be looking at conventional financing. So that's one thing, is your loan limits.
Okay.
So the one big advantage and why some people really, really like the FHA loan is it's a little bit more flexible on your down payment. So
Gotcha. Okay.
you only have to put 3.5% down on this loan program.
Okay.
Not all, but most of the conventional products are going to have a 5% down payment when you buy the house. So
Gotcha. Okay.
if you're if you're stretching the budget or saving money, that makes a huge difference there. The other thing on the FHA loan which helps people is it not always, but in some cases, if you have other compensating factors, your overall application, what it looks like, sometimes we can get approved lower credit scores.
Okay.
Even maybe with some bumps in the road in the past, it's a little bit more forgiving. I'll say
Gotcha.
that.
Okay.
That verbiage, and then a higher debt to income ratio than the conventional loan allows. And so, for people that don't know what a debt to income ratio is, real fast on that is you take your gross monthly income and then you divide it by your monthly obligation. So for simple math, if someone has $6,000 of monthly income on a conventional loan, 47% is usually the limit. So you're talking $2,700. Where FHA, sometimes you can even get above 50% if you have good credit scores, 52, 53, 54%. So that person with a $6,000 monthly income, they might be able to have total obligations, house payment, car, whatever they might have, $3,300 to still get approved. So the FHA loan, it's a little more, it just stretches the approval a little bit more, if that makes sense, and that lower down payment.
Okay. Now, when you're talking credit scores, what's the minimum credit score requirement for an FHA loan?
Yeah, so it really varies by bank, and well, first of all, you have to run it through desktop underwriter, just like you do to get approved eligible. So your scores and like the 540s, 550s, they're not going to get approved. Okay.
Gotcha. Okay.
There are some lending institutions out there that will do an FHA loan with a 580 score. But sometimes when they go that low, instead of that 3.5% down payment, David, we talked about, they may say, well, with that score, we want 5% down. We want 7% down.
Gotcha.
So I can tell you in our world at Belay Bank, even with 3.5% down, if someone has a 600 credit score, we will take a look at that and you can get approved and buy that house you're looking at. So, So it's still, it allows for a wide range of buyers. And, there's people with high credit scores using FHA sometimes for that low down payment, or people that are really below where conventional loans can get approved in that maybe 640 to 600 bucket. And the FHA loan is really the best option for them.
Gotcha. Okay. Clark has a question here. How long does someone have to wait to qualify for an FHA loan after filing bankruptcy? That's a great question.
Great question. So that would be 2 years from the discharge date on Chapter 7 bankruptcy.
Okay. Excellent. Okay. And then Clark also says, hit the like button. I got to agree with that one. Okay. Now, what about on that down payment, Jeff? Are buyers allowed to? What about gift funds or parents helping out?
Very,
things like that. Is that something that you can do that with?
Excellent question, David. And so that's another reason people really like FHA loans is it allows a family gift. Okay. And so where we say you have to have 3.5% down to buy that house, but if you're buying a $300,000 house, a little bit over $10,000, mom and dad, aunt and uncle, grandma and grandpa, they can gift you that money. Okay. Yeah. Now the gift funds, when you get a gift, it can be from a family member. It will sometimes allow a close documented friend where it may be like, this person raised me, this is something like that, but it just can't be Bob's the guy you hang out with and have beers and he's a great guy. That doesn't work. There's got to be a close family connection or your family member. And it also then does allow for some employers have some home buying assistance programs, as a kind of an employee perk. Those are sometimes allowed as well.
Gotcha.
95% of them we see, though, is mom and dad, grandma and grandpa, someone of that nature.
Okay, so if I wanted to go FHA and I said, hey, Clark is a good, somebody that hits my live stream quite often, I couldn't
probably not if it was like a close documented like family friend, like like you and Clark, he raised you or other things like that might work.
So our frequent visiting each other live stream doesn't qualify.
I could ask Dave, but I haven't seen that one go through.
Clark is saying I'm not giving Dave money.
No. Now, one thing I will tell you with that, just kind of as we're talking about the gifts, even though people think like, oh, it's a gift. A lot of times we get questions about like, why do you care where this gift comes from? It has to be documented. Gotcha. So even though grandma and grandpa, mom and dad, or whatever, they're not on the loan, we still get a copy of their check. You still get a copy of the financial statement or a letter from their bank, saying yes, they have X amount of funds in their account and they're able to do this.
Okay.
And a lot of times people say, well, why do you have to do this? And it's like, they want to make sure this is not just cash. It's coming from some random resource,
Right.
And so it's got to be a documented, proof of where these funds are coming from.
Okay. And then talk a little bit about that, because when people start, when they start preparing to buy a home, they start doing some crazy things with their bank accounts. And can you kind of talk a little bit about why that's a bad idea and why you shouldn't do that?
It is. So starting first with the down payment, I've met a lot of people through the years, and I get it. Sometimes, people have a lot of their money in the bank, and then they just decide personally, and they like to have, $3,000, $4,000, $5,000 sometimes at home that in a safe, and it's cash or whatever. And then comes time to buy the house, and cash, it's got to be seasoned cash in a bank account. So
gotcha.
I would tell anybody, if you're thinking about buying a house anytime this summer and you are sitting on some money at home in a safe or wherever, get it into your bank account.
Gotcha.
Because FHA is going to want to see that amount in there for over 2 months, so it's seasoned funds. Okay. Otherwise, David, it's going to show up as a large deposit, is what they call it in writing, and then they're going to say, where did this $6,000 come from?
Right.
And everyone can be upfront, honest, whatever, but there's no proof of saying it's I had this in my safe. Is it
exactly? Yeah.
Did neighbor give this to you? So I understand why sometimes people like to have some of that money at home, but when you're getting closer to that home buying process, get the money into your accounts so it can be in there, so it can be seasoned and show up on a 60-day cycle on your bank account statements, and then no questions are asked about those funds.
Gotcha. Okay. Now, what kind of properties are eligible for FHA financing?
Yeah. So clearly, obviously, your single family homes.
Okay.
And then FHA will allow a duplex and even a 3 or 4 unit property, but 4 units is the max.
Okay.
But all FHA loans have to be owner occupied. It's not investment property. So if you buy a duplex, a 3-plex, or 4-plex, you as the buyer, like David, if you were taking some prospective buyers out to look at this duplex, they would have to live on one side of it. They could not rent the whole property.
Gotcha. That make sense? Yep, that makes complete sense. But that'd be a great opportunity.
On one side, they can live on one, and a lot of people have done this through the years because it's pretty nice with a duplex is live on one side and then have rental income on the other side, and it doesn't usually. Sometimes it does. Sometimes it doesn't completely offset that mortgage payment.
Right.
It does a lot of it for them. So
now, have you ever seen anybody build a 4-plex and do that with an FHA loan? Is that at all possible? Would it be? I mean, I know it's kind of off the wall, but
I've seen many duplexes and just single family homes that we use FHA financing on all the time. So
gotcha. Okay.
Yeah, but you can't go above beyond 4 units and that's the same with conventional. Then it becomes commercial property, not a residential loan. So
gotcha. Okay. Clark has another question. If 2 people are on an FHA loan, does both people have to live in the house, or can just one of them live there as a homeowner occupied? Great question.
Yeah. So so usually how that works is if somebody usually when there's 2 people on a loan and one's not living in it, it's usually to help that other person get qualified. Okay. And that is allowed. And what they call that is a non-occupant cosigner. Okay. So a lot of times we will get that with someone right out of college.
Right.
They have a job and they might have some down payment, but there's student loans or, just with the cost of living and the affordability we're seeing today, it's hard, and home prices going up. It's hard to get approved by themselves. So maybe it's somebody here in Omaha and their son moves to, doesn't matter. They could live in Omaha, or they move to Kansas City. obviously Dad's going to be here in Omaha, but he can be on that loan with him as a non-occupant co-signer. So then
Okay.
Dad's credit and Dad's income is brought into the picture to help get that loan approved.
Gotcha. Okay. And then Clark has another question here. Do you see a lot of people doing FHA 203K loans for purposes of renovations? Another great question.
I see them.
Mm-hmm.
I used to see a lot more of them, to be honest.
Okay. Yeah.
The last 3 to 5 years.
Right.
I think, David, maybe we're talking about FHA loans, but you might maybe, I don't know if it, because the housing market with low inventory has been so competitive. A lot of the homes have just become cash offers, because I have not seen that product is a great renovation product, but we have not seen a lot of those in the last year at all.
I have not seen. I've heard of them, but I've never seen one done. I mean, when you get to that type of property, a lot of times the cash offers, they're competing with a cash offer, especially in today's.
Yes.
It's in the past, 3 or 4 years ago, if you had an FHA, you were really at a disadvantage compared to some of these other folks, conventional wise,
Yeah, and I think that's just the thing since, in essence, probably since 2020, when we started to have lower inventory. To your point, if there's a distressed house, by distressed, it needs some repairs. Yes, a seller, a listing agent could look at a loan option with that 203K, which for people that don't understand what that is, that's using the FHA loan, but then you're able to kind of remodel that property and get additional funds and have an end loan. Well, that seller and listing agent, they'd much rather just take a cash offer and move on.
Gotcha. Yeah. But theoretically, then you could do. I mean, this would be a lot of hoops to jump through. But if I understand you correctly, you could do a 203K with a fourplex. Then is that possible? Then I mean, that'd be a lot of hoops to jump through. I mean,
yeah. It's it's because you're talking about it's a renovation loan, really.
Right. Yeah.
And I'll be honest, I think in the 23 years I've been doing this, done many FHA loans, but last time I did a 203K loan was over 10 years ago.
Is that right? I have never seen one done. I've heard of them, but I've never had a buyer that did one. So I know they're out there, but I mean, it's there's
probably someone that specializes them in. I think it is kind of a specialty product, and those, a lot of lenders do FHA loans all day long. A lot of banks won't even do 203K loans because they are very complex. So.
Right. Oh, I've had a couple classes on them, and it seemed like there was just a ton of hoops to jump through with that.
Right.
Now, what about talk about a little bit about with FHA. You have mortgage insurance. Talk a little bit about that. Explain how that process works with mortgage insurance.
So on a conventional loan, as most people might know, you have mortgage insurance with any down payment less than 20%. Okay, but if you bought a conventional loan with 20% down, no PMI, no mortgage insurance.
Okay.
On an FHA loan, whatever you put down, there's just different levels, but there's always PMI on that loan. So on your basic loan at the 3.5%, this is somewhat viewed as a downside of the FHA loan. That mortgage insurance is going to be on there forever.
Okay.
So like a conventional loan, if you took 5% down, you made payments, your house went up in value, you can do what's called an appeal process, have your house reappraised, and that MI goes away. Okay. On an FHA loan, that with 3.5% down, it is on there for the life of the loan.
Gotcha.
Now, we'll get into why people should worry about that in a minute. But then I will also tell you, if you put 10% down, that mortgage insurance, monthly mortgage insurance, is on the lown for 11 years.
Gotcha.
So there is a shorter time period, but it is very, very rare that I see somebody on an FHA loan putting 10% down. They're looking for that lower down payment. Maybe they're a younger buyer. So it's usually on the 3.5%. It's going to be there forever. Now the other thing FHA does have is they have what's called the upfront mortgage insurance premium.
Okay.
And that is 1.75% of your loan amount.
Okay. Gets
added to your loan balance. So I just kind of put together an example so people could kind of understand that. So if you had a $310,000 purchase, a 310 purchase price, your upfront PMI 1.75 is a little over $5,000, $5,200.
Gotcha.
So
Okay.
you're putting your 3.5% down, and this additional 5,200. It's in essence, how FHA insures all these loans gets
Right.
onto your loan balance. So
Okay. And that gets factored into your
monthly payment.
monthly payment. Okay,
Yeah,
gotcha.
because you're,
Okay.
because it's like, you're like simple math. If you had $100,000 purchase price, 3.5% down, you'd have, be 3,500. You'd have a loan amount of 96,500. Well, you'd have that other 1,750 to add on top of that. So
Right.
you're borrowing almost $99,000 with a $100,000 purchase. So.
But on the mortgage insurance for FHA, they've kind of eased up a little bit on that in the past couple of years, have they not? In terms of the monthly amount.
Yes, that is true. So
Okay.
so monthly amounts when you have a conventional loan or FHA loan, there's a monthly factor. On an FHA loan, it's 0.55 regardless if you're a 620 score or a 730. Conventional, it varies all over the map. The stronger bar you are, the lower your PMI is.
Okay.
However, on a conventional loan, if you have a lower score, it is outrageously expensive. It can be like
Gotcha.
double an FHA loan.
Right.
So when we talk about one of the advantages of the FHA loan, yes, this PMI might be on your loan forever. However, if you had 5% to put down on a conventional, maybe you're in the mid 600 scores.
Okay.
I will tell you that FHA monthly MI is going to be a lot lower than that conventional MI. And so I would probably tell people at that point, my advice would be go with the FHA loan. You're probably going to get a lower payment.
Right.
But then when people say, well, yeah, what about that PMI? It's going to be on there for the life of the loan. Well, a couple things. Most first-time home buyers, and again, FHA is not just for first-time home buyers. It's for anybody. But any buyer looking at an FHA loan, as you know, David, people move every 5 to 7 years typically.
Right.
Or what's going to happen is there's going to be an opportunity to refinance. And so if you buy it with an FHA loan and 3-4 years down the road, well, let's just say rates go to 5%, hallelujah.
Yep.
Everyone's going to be refinancing anyway, so they're going to get down to that loan anyway. So yes, in theory, your 3.5% down, that FHA mortgage insurance is on there forever, but no one's ever going to pay it for 30 years because you're less than what half of 1% probably has ever paid a 30-year loan on it. Not going to happen.
And you can walk people through that. So if they wanted to reach out to say which loan program works best, then they can reach out to you and you can guide them through that process.
100%. Yeah. So so David, what I would like to do with everybody is, if someone calls and says, "Oh, I want to buy a house" or whatever, what we like to do is just an initial loan consultation. Okay.
Okay.
And the first part of that is the easiest part, and most people are pretty, get on computers all the time anymore. It's just going online, filling out this quick questionnaire for me. It kind of gives me an idea of what you're looking at, and then schedule a call with that person. Sometimes those calls are 15 minutes long. Sometimes they go 40 minutes, just depending on their questions. But really then it gives us an idea of your credit, your cash, just kind of what you're willing to spend, what you want your house payment to be. And then we put a roadmap together. And that's really where you find out, David, for somebody is, okay, conventional loan for best for you. Okay, it's FHA loan. And then whatever product that is, and since we're talking about FHA tonight, once we figure out it's going to be FHA for Mr. Buyer, then we start the education process of what is this loan really going to look like for you, and just explain all the nuts and bolts, kind of like what we're talking about on these products. Yeah.
Gotcha. And you suggest having folks reach out to you sooner rather than later, so you can put that roadmap together, correct?
1,000%. I can't tell you how many times I've seen people. They've been looking at houses online on Zillow, going to open houses, and not even a question of can I get approved or can I not get approved, but they haven't really had the numbers put together in front of them and realize, oh geez, we've been going out looking at all these model homes at 450,000. We only have 3% to put down. Well, but we can't afford a $3,000. I'm just making up numbers.
No. Yeah.
Afford a $3,000 house payment. It's like, well, boy, it's too bad. But you've wasted your own time, your family's time, and so when you do that initial loan consultation first and get a roadmap, not only, David, it gives people an idea of how much they can afford, how much they need for down payment, and then what that monthly payment is going to look like. So you have the whole financial picture. And then the other thing I always tell people, it is never too early, to your point, because even if someone wants to buy anytime this summer, when we do a pre-approval and like pull someone's credit, it's good for 120 days.
Okay. Okay, good.
So you got a pretty good time frame. So, we're sitting here in mid-May, so June, July, August, into September, so you're buying a house basically between now and Labor Day, or thinking about it. Now's the time to get pre-approved,
Yeah, because you don't know how many times I've had calls from folks that they see something, they fall in love, and then they're trying to jump through hoops to get pre-approved, and those homes are gone.
Yep.
It's too late. You got to reach out earlier, the better. So yeah, no, I completely 100% agree on that. James have a question here. If two people on an FHA loan, one person has a 500 credit score and the other person has a 700 credit score, will the down payment be lower or higher?
Well, the answer to that, unfortunately, is we can't, even with someone with a higher credit score, we cannot have that person with a 500 score on the FHA loan. So
okay, so you can't count their income.
Nope.
Okay, gotcha. So
yeah. I wish we could, but
right, that probably, because it takes.
So in that situation, that's where we really, getting pre-approved early is so important. But then we can do a couple things. Why does that person have that lower score?
Right.
Maybe there's some credit repair things we can look into it, because if they're not going to buy them right away,
right,
and maybe over 60 days scores improved, or like we talked about earlier too, hey, we can't put you on the loan. We need this much income to qualify. Maybe there's a mom or dad, a non-occupant cosigner, that will be on the loan now. And then, David, like we talked about, when rates drop in 2 or 3, we'll do a refinance. We'll get mom and dad off the loan.
Okay.
And borrow with the 500. We've helped them get their score up, and now they refinance and put them both back on the loan. Does that make sense?
Okay, that makes complete sense. And also kind of talk a little bit about when people co-sign, how they want to be cautious about co-signing, because that affects their debt to income on if they were to buy a loan. Is that right?
That is true. Yeah. So, so for a mom and dad, and everyone wants to help their kids, right? But it's okay, what are your future plans? Because yes, you might have a mortgage of your own, but you're co-signing, that's a debt that's going to be counted against you as well. So, if you were thinking someday you're going to have your primary house, and you've been eyeing these lake properties, and I have a nice little lake house for the weekends. Well, you got to factor in to make sure that all can fit into your debt to income ratio, because that will be counted as a debt for you. So
yeah, no good deed goes unpunished.
Yeah, that's a great point though, David, because I think sometimes people, the thing I hear the most about the co-signing is, well, I want to make sure my son doesn't have late payments, or it's going to ruin my. Like, well, you're on the loan too. You can get monthly statements or all that good stuff too. But it's like, it's thinking about like, well, this is going to impact your ability to access credit down the road as well. So
okay, Sarita has a question here. How does one find the FICO score the lenders use? There are so many out there, not the bureaus. It's hard to know what your score really is. That's a great question.
Well, I think the best way really to know is to go through that initial loan consultation and just do a pre-approval. Because even if you're not going to buy anytime soon, but you just want to be able to know where you stand. Yeah. A lot of times people ask me like, oh, if I do a pre-approval, even though I'm not sure if I'm going to buy, maybe I will. How much is this going to impact my score?
Right.
A tri-merge credit poll may lower people's score on average, David. They say 5 to 7 points. It's very minimal. It's very minimal, and it will rebound usually within a 30-day cycle, because it's just a mortgage pre-approval poll. You haven't added debt. You haven't had a late payment, so it's a very soft hit to the credit. So
gotcha. And the time to because there's always folks that want to shop around, and I appreciate that. But once you're under contract, that's not the time to say, oh, I want to investigate different lenders and that sort of thing. No. So find your lender, who you're going to use, and that's. Is there anything else a buyer should do financially before applying for an FHA loan or preparing for a loan? Anything else that you can?
Well, the one thing is, if you're younger and let's say you're in college or just getting out of college, and you're thinking you want to buy a house in the next couple of years, sometimes I'll run into people that they've never accessed any debt. They've never had a credit card. They've never had a car loan. And
Right.
those people, sometimes they've been fortunate enough, maybe mom and dad, or just whatever
Right.
their life circumstances. But now the downside is they don't have any credit scores.
Right.
So if you're a person that has never had a car loan, doesn't own a credit card, things of that nature, you want to establish some credit. So
Gotcha. Great advice.
Establish credit. That doesn't mean you need to go carry a bunch of balances. And,
right.
But that if you take out, if you shop at Shields all the time, get a Shields card.
Okay.
$1,000 credit limit. And if you spend $200 a month there, spend $200 a month, pay the balance off monthly. Get a Visa or MasterCard, use it to buy gas and pay it off. You want to just build some credit. So to answer your question, if you don't have any credit, you want to build up some credit for yourself.
Okay. How long does that take to establish that?
Great question. I think usually within about, a 3-4 payment cycle, people will start to get scores,
Gotcha. Okay.
But over time, the scores will raise because there's going to be longer payment history. Does that make sense?
Right. Yes.
You make 3 or 4 payments within your time period, no lates. That's building scores. But if it becomes a year and a half, you're going to have a really good payment history. So
okay. And talk a little bit about, in terms of establishing that credit and improving your credit score, the importance of paying your bills on time.
Yes.
And how bad that can really zing your credit if you're late and that sort of thing.
It can zing your credit big time. So one thing people always wonder about, like, because when you get, whether it's your cable bill or your phone bill, there's a grace period, 10, 15 days or whatever. Like, being 15 days late on a car loan is not going to ding your credit. What the credit reports are looking at is 30-day lates, 60-day lates, and 90-day lates. So sometimes life happens. You don't get that payment right on that due date, but you want to try to avoid at all costs. If you have that car loan due May 1st, if you go into June, it's going to drop your score 20, 30 points, like overnight.
Wow. Okay.
Yeah,
wow.
Going to have a big hit. So
okay.
Yeah, 15 days late, you're going to pay a late fee on most loans, but that's not going to affect your credit. But over 30 days, it will have an impact.
Okay. Are there any other common documentation mistakes or delays that you see when people are doing FHA loans that people can avoid?
Kind of back to sometimes the source of the down payment, where they'll say, sometimes, and we have to try to do the best on our side on the lending of, like, where's your money coming, your down payment coming from? And if they say, it's my money I have in checking or savings, but if you don't get those documents up front and the borrower is thinking, well, I do have that money, I just haven't put it in there. Well, here comes this delay, David, because now it's all cash savings, So, I wouldn't say there's anything that would delay a loan outside of just anything that would normally happen on any other transaction, So.
Well, and I think it's important from your standpoint is folks have to really make sure, because there's deadlines that you have to have with providing the closings document that close.
Yeah.
Is make sure that when the lender asks for something, they need it. They don't ask for something out of the, just for shins and grins. They need it because they need it. And if they need a bank statement, they need all 4 pages, even though that last page is.
Yeah. And so when we do the pre-approval, we try to get as much of that documentation up front. Now, if you get pre-approved now, but don't buy till July, clearly your bank statements will have to be updated, pay stuff, but it's going to be less work for you to do. And yes, to your point, moving quickly does matter, because a lot of times, especially in these competitive markets right now, people are in 3 weeks or 30 days all the time, right? So, 30 days is very common. 3 weeks, it happens. But, when you're talking a 3-week time period, to your point, we got to get an appraisal done. We got to get title work done. There might be a home inspection done. Files got to go through underwriting. So every day matters.
Yeah.
It can't be, well, I'll get that to you in 4 days. I'm busy working.
That doesn't work.
It doesn't work. We're going to have a problem here. So.
Jeff, what would you say is the biggest myth or misunderstanding you hear about FHA loans? I kind of have my idea, but I want to get your take on it.
Well, I think the biggest myth I hear is listing agents, they don't want to accept the offers because of the appraisals.
Okay.
Now there are a few more hurdles, if we want to use that word. The FHA appraisal, there's a few things the appraiser has to look at more than a conventional. So easy example, if a hand railing, like if a house has stairs up front to their house, if a hand railing's missing on a conventional loan, it's not a big deal. On an FHA loan, because they have some different safety guidelines, that seller would have to put a hand railing in before closing. So one of the big misconceptions, to your point, is I just think sometimes listing agents will automatically shove the FHA offers to the side because they're like, well, we might not have to fix the cracked sidewalk or that or this or that. But you might have a better offer over here, quicker close or more money or, better time frame for the seller, So, but that's, sometimes I do hear, a client makes an offer and the buyer's agent will call me back and I'll be like, how are we looking for John to get his offer approved? He's like, well, I'm not really sure. The listing agent said there's another conventional offer, so they're going to look at that one first. And there are some reasons, but just like some things, it's just like have become almost, that's what I hear people talk about all the time. So I'm automatically just going to do that, but it might not be the best scenario.
Yeah, and I think as a listing agent, then you also know your house, and then it's also when you're a seller, and when you say, hey, I'm not going to accept FHA or VA buyers, you're shrinking that pool of buyers.
Yeah.
And
what's your biggest myth?
I would say my biggest misconception about FHA is it's not just for first-time home buyers.
No, that's true too, 100%. Yeah,
people think it's just for first-time home buyers. They're like, no. It's for anybody.
It's for anybody,
except investors. Has to be owner occupant.
First time. It's not just first-time home buyers, but the other one, I think sometimes listing agents, to your point, they may say, I know this property is going to have no problem. Getting past an FHA inspection, but they'll sometimes ask me, oh, does this person have bad credit because they're doing an FHA loan or marginal? And sometimes the answer is no. They have really good credit, but they're carrying a high debt load because they have these student loans and they came out of college. So, we talked about in the beginning, the higher debt to income ratio that FHA will allow. So it might be like, no, they have great credit, but they just, had to pay for their schooling on their own. And so their debt situation, this is the best product for them.
Exactly. Because it's a total picture. And that makes relocate to Omaha. Ben says, great information, guys. Thank you. You're welcome, Ben. Thanks for stopping by the stream. And then what are some of the handrails when we're talking about that FHA process or the appraisal process? Handrails, peeling paint is another one.
Handrails, peeling paint. If driveways are really cracked out, we get a lot of that in Nebraska or Midwest because of the winters freezing. That's a big one. So handrails, peeling paint, cracked out driveways. Rotted wood sometimes around the window seat.
And that's very common in Nebraska.
Yeah, so those are kind of the main things. And an appraiser is not a roofer, so the appraiser is gonna look at the roof, and if there's visible damage or they can tell, that what they usually will do then is say ask for a roofing company to look at it, but they don't know for sure if it. But those things we just mentioned, that's kind of the main things. Sometimes when you go in basements, there's cracked foundation that'll get to have a company come in and fix that as well. So the big thing about FHA, and people go, well, why isn't conventional do this FHA? It's really the safety and soundness is the things that FHA is looking at. So those things in the category. If you don't have a handrail, it's a safety issue, right? So, cracked driveway, safety issue. So those type of things.
Safe, sound, and secure. Like if a window doesn't lock, or if it's an older window and it has the sash cords and the window doesn't stay up, and it could smash a little kid's hands and that sort of thing, which are just good things to do. Have
Right. So if you are, on the, this is kind of has a little bit of a negative light to it, but on the positive side, if you are buying a property with an FHA loan and these get called out on an appraisal, and your seller agrees to fix these things for you, you just kind of
Right.
cleaned up your property and spruced it up, and you haven't had to pay for it. So,
Well, and I think from a listing agent standpoint, if I'm gonna, we want to get the most exposure possible, and part of that is offering FHA financing as an option.
right.
When you're listing that home, hey guys, let's go ahead and take care of that peeling paint. Let's go ahead and add that handrail, because sometimes I've seen some handrails, and they're handrails for FHA financing. It doesn't have to be the most ornate, elaborate handrails. They can look kind of janky sometimes.
No,
So.
they do. Yeah, I've seen just a couple 2x4s, and but it passes. So.
The standard FHA handrail where it's a couple. They went to Home Depot, and yeah, hey, it's a handrail. You know what I mean? So hey.
Yeah, they didn't say it had to be super, super fancy. So.
Right. Yeah. No, that's okay. Clark has another question here. Do you have to terminate? Do you need to have termite clearance letter for an FHA loan? Not sure how termites look like in your state. Yeah. Clark is from Atlanta, and we have plenty of termites here.
We always get a termite inspection done.
Yep.
That's. I don't know. What are they usually about? $7,500, David?
I think they're about 105 right now. They went up a little bit,
but it's good. Conventional, you can opt out of it. But I always tell people sometimes just get the termite inspection done, because most companies offer a 1 to 2 year warranty on those.
Year warranty on that. You get an extension for like another $75 or something like that. But I was talking to a termite guy. From Bugsy, and I didn't know this, but he said that termites cause more damage every year than all of the natural disasters combined. And I was like, you got to be kidding me. I had no idea about that. I find that hard to believe, but I mean, that's his business. I mean, banks don't want to give you money unless you have a termite inspection.
Yeah,
right?
Yeah, and and I think the thing too is it's doing that, you can't see it, so the damage is happening without knowledge, because it's between the walls or wherever, your foundation. And
I've seen it on some newer homes before, where it's like, boy, it really they honeycomb in the hardwood floors, and it's like, wow, those little guys are creative, and they are hungry, one or the other.
We're not, like with Clark being in Atlanta, we don't have the near as much trees or the woods, so we're not
right. Zaretha has a question here. What about a mold inspection?
Not required. That would probably be something either you and your agent would notice when you were like viewing the property, like, let's make an offer on it, but we see this in the garage or the basement, or that is something that the FHA appraiser could call out too. So if they see damp, moisture areas like in an unfinished basement, they may ask for where is this moisture coming from, which could lead to mold.
Right, and you go down to the basement, you smell musty, musty smell, and it's like, hey, you might want to, if you can smell it, you can't sell it.
Is that a real estate term?
Yeah, I heard it somewhere. Because if somebody smokes, or if they have a whole bunch of cats, or if there's mold, it's like, oh boy, or an above ground pool. Those are not, but cigarette smoke, and it doesn't matter if you smoke in the garage. If they smell, I've had buyers walk in the house and turn right around if they smell the dogs or whatever, and poof, those folks are gone. So let's kind of shift gears a little bit. And what about, what trends are you seeing right now in the mortgage market, Jeff?
So I would say there's a couple things going on. The real quality homes, desired properties, and desired property could be the type of home, or maybe it's a really clean home, or the area of town it's in, whatnot. Those are still selling very fast.
Yeah.
I would say there's more first-time homebuyer activity right now.
Yeah, I'm seeing that too. Yeah.
A lot of people have asked me, why isn't there? So, first-time homebuyer, and then when you're in the industry like me and David, the next group you call move-up buyers. So that's like first house, and they're looking to move up. A lot of those people are sitting out, and the reason they're sitting out is they were fortunate during the 2020, 2021 in the heart of COVID,
Right.
Rates went to 2.5%, 3%. It'll never say never, but I'm going to say that's never going to happen again. And so
that's never going to happen again.
People sitting on a 2.5% interest rate who family is growing, or they didn't think that was going to be their, forever house, and now they don't want to move because rates are 6.5 to 7.
Right.
And so we're seeing that. And then the other thing I would say we're seeing a little bit. You could probably speak to. I wouldn't say prices are softening, but they're stabilizing. I don't think we're seeing the appreciation that we've seen in the last couple of years. But we're not going down, but we're not. I just think we're holding steady on price.
Yeah, it's and a really popular property will get 3 offers or 5 offers, whereas 3 years ago it would have got 20 offers or 15 offers. So, and they're still selling quickly, but a seller has to do more homework. The seller has to make those preliminary repairs to the property. They have to stage it. I'm a big fan of staging. Stage the property, put the pictures in the best light and that sort of thing, and then that sort of thing. And then what about folks? And I'm sure you hear this too, about folks concerned about they want to wait until interest rates come down.
Yeah, I mean, it's just there's a couple of things on that. I always look at as we're all on this journey of life one time, right, David?
Right.
So if you're just getting married and you're in an apartment, and you're like, well, we were going to buy, but rates are up, so we'll just continue to be in our apartment. It's okay until they go down. Well, we don't none of us know when that is. So I always tell people, live your life. Interest rate is an interest rate. Yes, it's a part of your monthly payment, but there's way more important things in life. Okay.
Right.
The second thing with that is, if you're looking at a 350 house today going, well, at 6.75 or 7%, I don't love that payment, but I'm going to be pretty good with that payment at 5%. Okay.
Right.
Well, if you wait 2 years, and in Omaha, even though we're starting to see things flatten out, there's still been a good appreciation rate of 5 to 6%.
Right.
Well, on 350,000, now you're going to buy that house for 400,000.
Right.
And so, yes, you may get that 5% rate, but you paid $50,000 or $60,000 more for that house, so it might be dead even.
Right. I mean, if you can buy and you can afford the payment, at the current whatever rate you're buying right now, and you can afford the payment, go ahead and buy. I mean, in the long term, it works out.
It works out, and there's always these cycles, and we saw them in 2008, 2009. Rates dropped, kind of the financial crisis we had then. Then there's another rally around 12, 13. And then rates have just kind of stayed low in the 4s and 5s for a while. They jumped up a little bit, and then COVID hit, and we had 2 years of really low rates, and now we've had 3 years of higher rates. But even rates going down to 5.5%, which would not be something like COVID, some big economic global event happen. Rates could get there, and that makes a big difference for someone's payment. So yes, I would tell people, to your point, if you can afford that house and you like it at a 7% rate, for example, don't sit on the sideline because of the interest rate, because that house may be gone and something could happen in 90 days. And as you know, rates move all the time.
Yeah, it's they're going to go up. One thing constant about rates is they're always changing. And nobody knows the future.
So tying to that, since whether it is an FHA loan or conventional loan, neither one of those loan products have a prepayment penalty. So you buy a house in July, and in December rates drop 1%, we're going to refinance your loan. So you're not stuck into that loan. Sometimes people ask me, when can I refinance it? Whenever rates go down.
Okay. Now talk a little bit about this. We didn't touch on this earlier, but and you don't see this really in this competitive marketplace, and that is the ability for the seller to pay some of the buyer's closing costs.
Yeah.
And on an FHA loan, how much can a seller pay of the buyer's closing costs?
Well, they can pay 6% of the purchase price.
Yeah, so
that is actually in most scenarios more than the costs that are there. Okay.
Yeah.
So it is wild. So yeah, for some people, and this is where going through that initial loan consultation, it can walk you through this. But like with that $300,000 buyer, if they have mom and dad gifting them money or a family member, and then the seller, let's say between taxes and insurance, closing costs, Dave, just for an example, I'm throwing out a number, it's $8,000 in settlement.
Right.
But you negotiate for the seller to pay $5,000. Someone can get a house for $3,000 pretty easy.
Right. Yeah. And you can also work with NIFA as well.
Correct. Yeah.
Okay.
You can do an FHA loan, and then you can go to the NIFA program. That is just first-time home buyers, and then get a 3.5% second mortgage through NIFA. And the beauty of that 3.5% second mortgage through NIFA, it's at a 1% interest rate. So it's like, so I always tell people it's the closest thing you can get to free money. That's an amazing. Interest. It's on a 10-year loan, so yeah, that's another great way to do that. And David, I would tell a lot of buyers this too, and I'm sure you do when you're out getting ready to make that offer. If someone's going to offer, if cash to close is tight for somebody, and they're like, well, let's offer $295 instead of the listing price of $300. I would say your money's going to go a lot farther if you offer full price and ask that seller to pay $5,000. Keep some money in the bank for it. Keep some money in the bank because, owning a home, there are some expenses, and it's always everyone's going to sleep a little bit better at night knowing they got a couple months of that mortgage payment tucked away just because you never
you never know when life is going to happen, and so that's. Yeah, you can, there's a lot of different ways and that's why it's good to start early, reach out, talk to a loan officer, talk to your real estate agent, get a plan in place before you go on Zillow, fall in love, and then you're like, oh, I got to buy that at home. Can I get qualified? And then it's like, no, you're not going to get qualified.
100%. Yeah. The pre-approval process anymore with technology, and I appreciate you showing my website there. It's just so easy. I mean, you can be watching your favorite Netflix show at night, click on that button, and literally it takes 10 minutes to fill out. And, I get notified when people fill it out, and, we usually get back to people the next day, and we might not go through the whole loan consultation that next day, but it's like, hey, we have a little bit of a conversation, and it doesn't take much time to really figure out where you stand for your future. So
okay. Now, and we kind of talked a little bit about this earlier, but what about folks who think the market, I get folks that watch a lot of YouTube, and I get the folks out there that think the market is going to crash. And again, every market is local. Real estate is like the weather. It's all local. And there can be markets in some other cities that take a hit and that sort of thing, but that doesn't mean the Omaha market is going to take a hit.
No.
What do you say to folks that are concerned about prices going down and that sort of thing?
I usually just talk to them about historical figures, historical statistics, and in the Omaha market, I think over the last 30 years, there's only been, I think, 2 years where there hasn't been any appreciation. There's actually been, a decrease in home value. There's been years where it's held steady. Yeah. I think the 30-year average, and correct me if I'm wrong, you probably know this number on the real estate side. I think it's like 3.7 or 4% is the average, So that's a 30, I'm not just looking at 2 years. So if you're looking at 3 years, on average, it's going to be 4%. So when people ask me that, I'm like, yeah, you might not get some of these big bumps of 6 to 8% like we've seen recently, but I think your property is going to hold its value as long as you don't overpay.
Exactly. Yep. And it's kind of funny that remember back in 2020 when we had the 2.5% interest rate, and people were paying $40,000 over list price. Yeah. And all of those uncles who said they were overpaying for that property. It's funny, I never hear from those folks. All of those folks that said, "Oh, I can't believe they're paying that for it." Those folks are looking pretty good right now, aren't they?
Yes, they are.
Yeah.
It doesn't, and that's, as we've talked a lot about this, and we're going to run out of time. We're going to have to get on a whole other topic, but buying your house is for you and your family and enjoying that space, but it is also the cornerstone of building wealth in our country. I mean,
Exactly.
wealth, building wealth, the stock market takes huge swings, but real estate over the last 30,
Right.
40 years, like we've talked about, it stands the test of time. I mean, it
Right.
just does. So,
Yeah. I mean, you can't live in can't live in a stock, and,
no.
it can go up and down. I mean, you got to have a long-term outlook. You got to be in it for a while. Then, I look back and it's more of, I should have bought more instead of, you know, yeah, no, I get that all the time. Um, what any advice for in a competitive market, because it seems like below $300,000,
Very competitive. Yeah.
extremely competitive. If I could get folks, if they're in that 210 range or 220 range, I mean, they're just taking a beating and they're just looking at things that are just all sorts of, you know, issues with the house. If those folks can get up to 300 and start competing with new construction, then they have more of an opportunity. But what can folks do that when they're in a competitive offer situation and they have an FHA loan? Any suggestions or tips to make their offer stronger, or any idea
Well, I think
from a lender standpoint?
probably going to have to be asking full price, or you're asking, offering full price. Excuse me, not asking.
Yep.
Offering full price, or maybe a little bit above.
Mm-hmm.
If the house is empty, so that seller is out of the house already,
Yeah.
say we can close in 3 weeks, whatever, so a quick
Right.
close above or at or above asking price.
Mm-hmm.
If this one, I go back and forth on waiving a home inspection, and you can
Right.
talk about that
Yeah.
too. But if it's a newer home and it looks like maybe there's still a warranty on those things, yeah, I shake my head too. I don't love
Yeah,
that.
I'm not a fan of that idea, but I mean, you got to do what you got to do. I mean, it's like, yeah, I mean, it's a very competitive market out there.
Yeah, that one is not something I would recommend.
Oh yeah, I'm not a big fan of that, but I mean,
but to answer your question, I've seen people win deals because they've waived their home inspection.
I know. I mean, it's like,
yeah, it's a little bit of a risk, but
it's a giant risk. I mean,
one thing I'll also tell you we can do is, so typically, when we do a pre-approval, we go through all the documents, look at it, but our underwriter has never laid eyes on that file until you actually have a contract. Okay. But sometimes if people tell me, we're in the price point, it's really competitive, right, we can actually then, what we do is, it's a TBD, to be determined property. Okay. But we'll actually take that file through underwriting. So that can also give you a advantage in the market, because instead of just having a pre-approval letter, if you were working with the buyer, David, you could go to that listing agent and say, hey, Mr. Jones has already actually been through underwriting. Right. The only thing we're waiting on is appraisal, title, homeowners insurance, and they're ready to close. So then they know, the seller too, like, well, yeah, it is FHA or whatever, but the underwriter's already put eyeballs on this thing and it's good to go. So we don't have any concerns here. So
right. Yeah. A lot of times what I'll tell a buyer is, ask, or what I will ask the agent on the other side of the transaction, I'll say, other than price, what is important to the seller? Because maybe they need a couple days post occupancy, or maybe there's something else you can, what closing date they want, just little things you can try to do to get your offer just a little bit better.
That's a fantastic idea. Maybe that seller, they need to they need to sell to buy, but they don't want to move in the same day. But your buyer can say, hey, we can close, and then post occupancy agreement, but I'll close on, May 20th, but I won't move until June 1st. So that seller has 11 days to get out. So
exactly. And then the other thing I'll say is, like, let's say you're in a multiple offer situation, find out how many offers there are and say, okay, let's say the house is at 295. And you're thinking, well, there's probably somebody out there that's going to go as high as 310. Okay. Go to 312 if you're comfortable with it, to try to put you over the edge. And then I tell buyers, you got to submit your highest and best, and then don't count on that seller to counter your offer. Make an offer to where if the other person gets it, by $1 more, you're perfectly fine not getting the house.
Right.
You know, and that's something that it's all right. And then Clark says, great show tonight. Thanks, David, and for having Jeff on. And
Appreciate
good information. Thank you very much, Clark. And then, well, Jeff, I tell you what, this hour flew by.
It blew by, yeah.
Yeah. So if anybody wants to reach out to you, they can reach out to you there, or they can check out your website there and apply right online, so you can help folks out, and reach out to Jeff if you have any questions about FHA financing. It's a great opportunity for folks, and that sort of thing. We got two more comments here. Let's see. Thank you. Thanks all. Lots to think on. Excellent. Thank you for stopping by. And then let's see. Ludi Djibouti says, this is great. Thank you both. Well, thanks a lot,
All right,
Ludi,
awesome.
for stopping by. Jeff, I really appreciate you stopping by tonight.
Yeah,
Great
absolutely.
show. And thank you very much.
With questions. Thanks so much. Enjoy your evening.
Excellent. Hey, thanks again. You bet. Take it easy.
Thank you.
Bye-bye. All right, everybody. Well, I tell you what, I hope you got some great information from tonight's stream. And then don't forget, if you can give the thumbs up for the stream, I really appreciate that. And if you're not a subscriber to the channel, hey, do me a favor and subscribe. And then we'll be back next Tuesday at our normal time. And you guys make it a great evening. Thanks again. Bye-bye.